Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. And definitely not an easy day if you're an active bull. You can only look at how you handled yourself when markets trade very fast. You can only have a game plan to make adjustments when things do certain things. And we started the week on Monday. The first tweet of the week was, here are your 3 keys to the week. One was, can Apple bounce? Considering that Apple literally, was down 3 days. If they were going to come for value and the market was going to be okay, it should bounce right around the 200-day. Will Netflix hold upper levels to create some kind of FOMO, or will the best of the earnings be sold so then no one's in a rush to do anything? Then Google, how would they react to Google? And lastly was, if we hit 3%, do the banks bounce or not? So little by little, we've been getting clues on market composure. First one, I guess both yesterday were really Netflix and Apple. Apple tried to bounce, was up $1 and went red and broke the prior day's low. Netflix broke the earnings gap and showed no FOMO. And then today, Google was already negative before we even started trading when the S&P was still up 15 handles. For me, I had 4 or 5 longs. I was trying to manage it instead of me putting my bear hat on and saying I want to short Facebook when it gets below 165, press Google, short Apple below the low. I'm like, let me look where the strong stuff is. Let me see if the banks show relative strength, which they did for half the day while yields are higher, and see if the energy group that's strong has a bull flag can continue. Well, ultimately they got to everything, and there was hardly any place to hide, and the only people that made really good money were those who, looked for weak tech stocks that were showing weakness prior. And if you had longs, the only thing you could do and be happy about is if you sold when levels broke and you followed your stops and had some paper cuts versus gushers. So anyway, let's go to the chart of the S&P cash. To me, this was your line in the sand. This was your 2660. We talked about it, or 2657 yesterday. It played with it a little bit, but then broke it. This morning, the question was, could he get above and stay above yesterday's high? Okay, that was the question. So did he get above it and stay above it? No. Did it then go red? Yes. Did it break 2660? Yes. Or 2657. So this was your area to get out of the way if you were long the S&P cash or the spiders versus sitting through this. So for me, I was long the spiders. I sold some, pre-market, booked it, and then got out of some and then tried some and got stopped out when it broke the low. And now, hard to tell what's next, guys. Here is, big support. We're down here again. I just don't know. Yes, earnings are good. Yes, the economy seems okay, but we saw a lot of this type of stuff before we hit peak, earnings, which some are saying, if you listen to Caterpillar, what they said, who knows. But all in all, there's a bit of room here, okay? You have a high, lower high, broke, the level you shouldn't have been in, which was right around there. So now the question is, tomorrow, what do we do? I would be flat, down 1, 2, 3, 4, 5 days, oscillated was plus 42, now we're minus 20. So we're not quite minus 40, and we're very broken. So it doesn't give you a recipe to just be starting long. Yes, could you be long, and if we open down, could you trade out of it? Yes. Or could you be short, and then if it gapped up, you could sell strength like the past few days? Maybe. That's what's been happening every day. For me, I'm just going to be flat. So going into tomorrow, this is all you know. Here is today's low. Today's low is 261.28. 200 days not too far above it, and then here is your band of support under. So again, another rising wedge kind of that's broken. There's more broken over here, but it depends on how tight you are. Or even remember when this happened. I feel like, wasn't it just yesterday that we were trying to short the spiders? I was short. Anytime I'm short 2 or 3 indices, you should know that you should be short a lot of things. I was short the spiders and I was short the Qs for like this day, and I think I was done with it on this day if I was even there. And now look. Anyway, moving around, the Qs also, not much you could have done if you were long. This didn't even make it to the prior high, showed relative weakness, and then this could have been your out. And if you're looking to press short, that was your spot. And now, it's above the 200-day above these spots, but has a bit of room. So what do you know tomorrow? We'll see what happens at yesterday's low. Do we open above it, and could you be long versus it? Does it go through it and cascade to here, or do we get a red dog reversal? We'll see. All I know is you have a high, another lower high there. XLEO was long, was working for a lot of the morning, but then that too failed. Here You know, I got out of most when it got back below that 74. This is 74.20, and then right here I was like, you know what, 73, 76 is my out, and it's better than, you know, holding it all the way through to here. So now this wider range green bar might lead to more downside, might not. It's holding up better, but you know, first time you see a candlestick like this since it started its rally at 69, so take some care. XLF tried to act well, but again, couldn't hold up on its own. You have a rising channel here, you know, pretty wide range candle, got rejected here. Overall, I don't know, it just doesn't look like a long to me. I tried being long today, thinking if anything's going to help, it's going to be the banks, but now, you know, you could even make the point that this is a pretty darn big head and shoulders top pattern with, you know, a rising wedge, symmetrical bear flag that could trigger to the downside. So just take some care. We'll see. If this breaks below this, chances are the market's going lower. We shall see. Let's go to stocks. Okay, what happened first? Netflix broke 331, broke 323, and bleh, took away the FOMO. So here it is. I was long it on this day, thinking, hey, Netflix looks pretty darn good. Maybe it could hold a high-level bull flag, you know, and create some FOMO and act well, and all well could be in, you know, tech land. And then first signal that this is not the case was when it broke 331, which was, you know, right here. I don't know why this is moving around. Okay, so anyway, broke there. I remember I got out of some, stayed with it a little bit, but then your next spot, the only thing you knew is where is this post-earnings gap? Right here. This is where, if it's going to be any good, if it's going to go sideways and take this out, it's got to hold this. Well, you know, didn't happen. Now what? Okay, well, at this point, this doesn't mean anything. This doesn't mean anything. That was your gauges. All you have is gauges every day. You know, if it was going to be good and hold up, it should have held this. Didn't happen. So now, a little bit of a bounce off the 21-day, or the 50-day. Sorry, broke the 21-day to the 50-day. You have today's low tomorrow. I lost money trying to get this to go green today. What an idiot I am. And now, you know, it's still very elevated. So you got to take some care here. You can't just buy it. But when the best in the breed that has the best, you know, subscriber growth, et cetera, can't hold upper levels, why is anything going to want to hold upper levels? That's why it sold off, and that's why when Google sold off today, Amazon sold off, and now we'll see what happens here. Does this hold tomorrow? If it opens up, no real setup, opens down, maybe you could buy versus, or you get some kind of red dog reversal. But overall, kind of a breakout failure, you know, if you really want to call it that, which it is. Amazon, earnings are Thursday. We'll see where it is. You know, every gap up's been sold. I hate gap up sells. I'd rather gap down buys, but whatever. It's not, you know, the market doesn't do what I want it to do. Gapped up, you could have sold it. You could add it here if you're looking for the H sell setup. I was not. But all in all, showing some relative strength, but I don't know what the hell they need to say in order to get some kind of better action here. Maybe they need a 5-for-1 stock split, but just good earnings are not going to do it. Still have a pretty big, you know, downside move until support, so we shall see. Google was, you know, pretty good telltale, you know, where we said in my morning note, it's got to get it back above and stay above 1,066 to be worth it. It opened below and never got back above it, and then just cascaded lower this entire time. And now you have some pretty big support going sideways below all the moving averages, high, lower high, another lower high. It's going to need so much time. These things are so broken, and you need so much time. This, you know, this looks, I don't know, pretty scary. Some of these things have some pretty scary macro head and shoulders patterns that if this market wants to break these, over the last 3-4 years, these necklines have been awesome support to buy. They've been bear traps, but one of these times it might not be. So you just got to be careful. Just buying a dip and buying and buying and buying, because you never know, you know, what could happen here. That's why we don't have opinions. But all in all, this is pretty big support, and yes, maybe you try it there, but if this were to break, damn. You know, you're talking about another 100 points in a heartbeat. Facebook, we talked about this 165, still below the 200-day, broke 165, opened below it, friggin' 6-7 points to the downside for those of you who were looking short. Now I guess you have this, and then you have this. But again, if Google, which has a of really, really low PE, and not saying it's in the same business as Facebook, but this whole same data scenario, but all in all, you know, a lot of skeptics out there. You know, Google's going to have to raise their CapEx, going to have to hire people to protect data, and, you know, with the high multiple that it has, it's hard to say that it's going to ever be back up here very soon, and, you know, why be in a rush? You know, it's below the moving averages. It's not like, you know, here when, woohoo, above the 8 and 21 day, held it again and broke out, went sideways, took it out. Now it's below the 200-day moving average, which is a macro sell signal. What did it do? It oversold, bounced to it, stayed below it, turned down, so take care. The more I look at these things, the more I'm like trying to, you know, get out of my head what's happened the last 9 years. You know, if you remember my first time I was on CNBC, we had a head and shoulders pattern, you know, and I wasn't trying to overthink, and I told Mark Haynes we're going to go down 10%. We went down 10% in 2 weeks, and I was been on ever since. You know, I'm not saying that it's going to happen and we're going to get this crazy meltdown, but you know what? The S&P cash is 12% off highs. Yes, the earnings are great, and, you know, we're in good news territory, but they bought bad news for 5, 6, 7 years out of the 9 years. So now, without QE, without, you know, 100 billion in, you know, whatever they did with that money, it's a little bit harder. Maybe some bids will come back after earnings season when they're allowed to do their buybacks, but maybe not. All in all, though, this is not a great looking pattern. You know, broke the high level, retested the 200-day, came back below it. Yes, it's Facebook, I know, but so many things, you know, you can't make a, you know, elevated wise, look where it is. Okay, definitely can come to 140. Could even come to here if it wanted to. So just don't blindly buy things, you know, especially if you're trading for P&L and cash flow. As far as MU, some guys are looking at that. You know what? Broken too. Why is this broken? Okay, well, first, A, broke the 8-day here, got below the 21-day, tried to rally, broke this spot, and now it's below the prior week's pivot. Here's your 200-day. Doesn't look so constructive to me. It's below the moving averages. Here, it was above it. That's when it reclaimed it. Here, it was showing relative strength. Here, different. Kind of, you know, look when things are different. Caterpillar, what a friggin' joke. You know, gapped up. Then they said it's peak earnings, and I wasn't on my seat when it happens, but that's what got me stopped out of most of my longs. And now look at the size of this candlestick. Wow. Anyway, I don't even know what the hell you could do there now. I mean, it's going to get down to the 200-day wide. You want a definition of a wide-range engulfing bearish candle? Well, here it is. If you were long it, maybe you had a way out here, or maybe you had a way out here. Hopefully you just didn't buy it the whole way down and say, I thought their earnings were really good. I'm a buyer, you know, without looking at the price action. But anyway, hopefully you didn't get caught in that and used it as an example to get out. And I'll say it, you know, guys have had a hard time short too and long. Usually you think commodities can go up. I was long GLD and silver calls last week. Thank goodness I sold some GLD calls, you know, into this day, and again, didn't break out. Silver, you know, looked really good, right? Didn't silver look really good? Silver looked awesome right here. Look at that, nice tight channel. Get above here, it's going to go. Woo, look at that. Okay, thank goodness I sold a little bit into that. And then here, sold a little bit more, down to half. Didn't think this was going to happen, you know, a commodity when, anyway, those are a zero. Well, I got actually out 30 cents, but it could be if it doesn't ever get back above 16. So it's not easy anywhere. So when it's not easy anywhere in commodities and sectors, and whether you're going home short because you're closing the lows and then you gap up and then you have to sit through a half an hour back and forth thinking you're wrong, and then you cover and then it goes lower, just take down your size, okay? Low gross, low P&L is a phrase that one of my richest friends have ever said to me when things are kind of, you know, in figure out market discovery stage. Not balls to the wall, make your guess, all or none. It's low gross, low net, get situated, make a little bit of money, net money, and then when you get more clarity, you add to it, and you get bigger, and then you have more continuity. Right now, it's hard to tell. Things are pretty broken and kind of oversold. Hopefully, you know, they get more oversold. Maybe we get down to that lower area that we had in, you know, late March, and we get a quick bounce off there for a trade, and then we figure out what's next. But all in all, you know, ask yourself, how many names are above the 8-21 day? Not a lot. How many high beta tech names, leadership go-to names are above the 8-21 day? Not a lot. So if you've taken Redler Ultimate Access, that means what? We're not in portfolio approach, even though we tried it a few times in the past week or two. The market's just not conducive for it. We're back to day trading. Look for red dog reversals in the hole or H-cell setups, which we've seen them all week long in tech. So maybe tomorrow we get that down open to get some kind of rubber band type trade after being down for 5 days versus opening up 100, 15 handles tomorrow in the same scenario. Either way, you can't control what the market's going to do each morning. You can only control your positions going in and how you handle it. And some time periods are easier than others. Right now, for me, not saying it has to be for you. Maybe you love being short and you just push and push and lace in. Good, this is your time of year. You better friggin' score. Because out of the last 100 years, the bull market usually wins. Every now and then you get these pockets where you could press and make really good money. Same way I say even from the bullish side, there's like 3-4 times a year you make your money. The other times you just have to net a little bit of money because it's hard to get that follow through. And tomorrow's another day. Tomorrow's only Wednesday. Today feels like a Thursday, but it's only a Tuesday. With that said, have a good night. I posted my segment on CNBC if you want to watch it, and I'll see you in the morning. Have a good night. Bye-bye.